ഇന്നത്തെ വീഡിയോയിൽ നമ്മൾ ഡിസ്കസ് ചെയ്യാനായിട്ട് പോകുന്നത് ഫിനാൻഷ്യൽ മാനേജ്മെൻറ്റിൻ്റെ MCQs ആണ്. ഫസ്റ്റ് ക്വസ്റ്റ്യൻ ഇസ് ദ അപ്രോപ്രിയേറ്റ് ഒബ്ജക്റ്റീവ് ഓഫ് എൻ എൻ്റർപ്രൈസ് ഈസ് ഓപ്ഷൻസ് മാക്സിമൈസേഷൻ ഓഫ് സെയിൽ, മാക്സിമൈസേഷൻ ഓഫ് ഓണേഴ്സ് വെൽത്ത്, maximization of profit, none of this. The answer is maximization of owner's wealth. Second question, the job of a finance manager is to confine options raising funds, management of cash, raising of funds and their effective utilization, none of this. And the answer is raising of fund and their effective utilization. Moving on to the third question, financial decision involve options investment, financing and dividend decision, investment, financing and sales decision, financing, dividend and cash decision, none of this. And the answer is investment, financing and dividend decision. Fourth question, net profit ratio signifies options operational profitability, liquidity position, solvency, profit. And the answer is operational profitability. Fifth question, working capital turnover measures the relationship of working capital with options fixed asset, sales, purchases, stock. Answer is fixed asset. Moving on to the sixth question, dividend payout ratio is options PAT capital, DPS divided by EPS, preference dividend divided by PAT, preference dividend divided by equity dividend. And the answer is DPS divided by EPS. Seventh question, inventory turnover measures the relationship of inventory with options average sales, cost of goods sold, total purchases, total assets. And the answer is cost of goods sold. Eighth question, the term EVA is used for options extra value analysis, economic value added, expected value analysis, engineering value analysis. And the answer is economic value added. Ninth question, return on investment may be improved by options increasing turnover, reducing expense, increasing capital utilization, all of the above. And the answer is all of the above. 10th question, in current ratio, current assets are compared with current profit, current liabilities, fixed asset, equity share capital. And the answer is current liabilities. 11th question, there is deterioration in the management of working capital of XYZ Limited. What does it refers to? Options that the capital employed has reduced, that the profitability has gone up, that debtors collection period has increased, that sales has decreased. And the answer is the debtors collection period has increased. 12th question, debt to total asset ratio can be improved by options borrowing more, issue of debentures, issue of equity shares, redemption of debt. Answer redemption of debt. Moving on to the 13th question, ratio of net income to number of equity shares known as options price earning ratio, net profit ratio, earnings per share, dividend per share. And the answer is earnings per share. 14th question, a current ratio of less than 1 means current liabilities is less than current asset, fixed asset greater than current asset less than current liabilities, share capital greater than current asset. Answer is current asset less than current liabilities. 15th question, which of the following is a measure of debt service capacity of a firm? Options current ratio, asset test ratio, interest coverage ratio, debtors turnover ratio. And the answer is interest coverage ratio. 16th question, gross profit ratio for a firm remains same, but the net profit ratio is decreasing. The reason for such behavior could be options: increase in cost of goods sold, if increase in expense, increase in dividend, decrease in sales. And the answer is if increase in expense. 17th question. Which of the following statement is correct? A higher receivable turnover is not desirable. Interest coverage ratio depends upon tax rate. Increases in net profit ratio means increase in sales. Lower debt to equity ratio means lower financial risk. And the answer is lower debt to equity ratio means lower financial risk. 18th question. Which of the following helps analyzing return to equity shareholders? Options: return on asset, earnings per share, net profit ratio, return on investment. And the answer is earnings per share. 19th question. Financial planning deals with options: preparation of financial statements, planning for a capital issue, preparing budgets, all of the above. And the answer is preparing budgets. Moving on to the last question. Process of financial planning ends with options: preparation of projected statements, preparation of actual statements, comparison of actual with projected statements, ordering the employees that projected figures may come true. And the answer is comparison of actual with projected statements. Thank you.